Well, welcome to Business Talk here on Business Tech, and time to talk about the home advantage that investors do enjoy. And while the JSE has actually been holding its own of late. Now, we know global markets have spent much of the year swinging between euphoria around AI, artificial intelligence has been everywhere, a lot of interest rate anxiety and alarm around the Middle East. Meanwhile, the supposedly unfashionable JSE has reminded investors that diversification actually does mean occasionally owning something other than the same handful of American tech giants. But is the local market genuinely becoming more attractive, or has it merely been less volatile in certain parts of the year? And with the JSE offering fewer listed companies than it once did, does it still provide enough quality and choice for South African investors? So to unpack that, it's a great pleasure to welcome our regular market sage once again, Wendy Myers, head of PSG Securities. Wendy, great to have you back. And I love the topic because often when we talk about diversification, we think offshore and we forget about the local market. So before we look at how the JSE has performed this year, I think there's been a lot written in the media around the delistings the JSE has experienced over the last 2 decades or so. I think we're below 300 companies now. Should investors be concerned that our local bourse doesn't offer the quality of companies that offshore exchanges offer?
So I think, Michael, I think investors are very wary. They've seen a lot of negative press in the media regarding the delistings, to your point, over the last 2 decades. I think in the late 1990s, we had over 850 companies listed on the JSE. And now we're actually, 263 as of today. So there's been a massive wave of companies moving off the exchange. But I think there's a bit of context to that investors should be aware of. I mean, I think 40-odd%, just under 50% of these delistings were actually due to mergers and acquisitions. And that certainly happened since 2007. These, delistings were, company arrangements, schemes of arrangements and takeovers and restructurings, and not company failures. So I think investors must be just a bit more aware of the context as to what these delistings, the reasons for it. And then also, I think there were some management buyouts. I think about 12% of the balance of stocks was due to management buyouts of companies that had been listed. And I think also there's a fair amount of companies that also appreciate the fact that there's far more liquidity in offshore markets. So there has been a spat of companies that delisted from the JSE and relisted offshore. So I think that's very prevalent, which highlights why, to my mind, you've also got to have offshore exposure in your overall portfolio. But I think that the key point is that yes, the JSE definitely still offers value. Yes, we have seen delistings, but I think the companies that remain on the JSE certainly can deliver if you are looking to get exposure to top companies, specifically in the resource, financial, and industrial sector. I think it's worth unpacking today.
Yeah, absolutely. Because yes, I think it's a nuanced picture that you've painted around delistings. Often the delistings crisis, as it's sometimes called, is painted as just merely a function of South Africa's slow growth or the high costs of listing and some of those financial and regulatory burdens. But it is more nuanced than that. Sometimes companies just consolidate, management buyouts, as you say, they're taken private and they remain very profitable private entities operating in the South African economy. It doesn't mean the South African economy is imploding. Now, we do know, though, that economic growth is a key ingredient to reversing the trend of the delistings that we've seen. It also sits alongside the regulatory conditions and market liquidity. And I believe the JSE has obtained the FSCA approval, that's a Financial Sector Conduct Authority, to reform their listing requirements to ensure that they're fit for purpose and they want to remain relevant when considering international norms, which the FSCA approved towards the end of last year. So it's a fairly new initiative. Can you unpack that for us? Is it enough? Is it reversing the delisting trend?
Yeah, so I think, first of all, a big hats off to the JSE. I think they realize, they need to play a part in transforming their exchange and making it remain internationally relevant. So they obtained this approval from FSCA, I think, towards the end of last year. But they've been engaging with Fisco for about 3 years on this initiative, and it was all around simplifying their listing requirements. So, you know, absolutely fantastic initiative by the JSE to drive new listings on our local bourse. And it has actually paid dividends, Michael. I mean, obviously it's early stages, but if we look at some of the high profile companies that have listed since then, I mean, you look at Cell C, they listed on the main bourse in November 2025. And that's really great, to see competitors to MTN and to Vodacom. It's great to have an additional cell phone operator listed. And then Optasia was a landmark IPO that also happened in November last year. And this Optasia is a global AI-powered financial infrastructure microfinancing platform. There was a lot of excitement, certainly, and take up by our clients of that IPO. And I look forward to seeing how it delivers good returns for our clients. And then lastly, I don't know if investors are aware, Canal Plus is a French media company. They did a secondary inward listing on the JSE main board in June of this year. So very recent. This basically was the first French company to trade on the JSE following its multi-billion dollar takeover of the MultiChoice Group. So, it's early days, Michael, but it gives me a lot of comfort that we're heading in the right direction, and we've got solid companies that are recognizing the JSE as an exchange that's worth being on. And I can only see this improving as we go forward, I must be honest.
Well, there's a requisite care and attention being given to the issue. And it really started under previous JSE CEO, Leila Fourie. She then passed the baton over to Valdine Reddy. They're doing some great work with the likes of Stuart Theobald and others in Operation Pumalela, which is looking at these kinds of things. How do we really make South Africa an African center for raising capital, for supporting entrepreneurships, new IPOs, and they're very innovative plans in the pipeline. And I think early signs are quite good. Bottom line, though, is we need to see economic growth, and that really is not up to the JSE. Let's hope those economic reforms continue apace. Let's just jump into how the JSE has performed this year. And we know that it had a standout year in 2025 due to the precious metals boom, and you and I unpacked that. I think gold and platinum shares contributed at least up to about 2/3, I think, of the market gains. Plus, we had very positive gains from your heavyweights. Think MTN, Naspers, Prosus. So what was the macroeconomic driver of this in 2025, and how have you seen that play out this year so far?
Yeah, so I think, there's a lot of emotions in investing. And, certainly the year of 2025, we had expectations in the market as to falling inflation, and that's always good for investing in equities because, as you know, falling inflation leads to lower interest rates. It's easier access to money, and also because of the stronger rand. I mean, the resources had an incredible standout year last year, as we've discussed, Michael. So the stronger rand also helps play to support our local share performance. But actually, we're seeing a bit of a different picture this year. So I think, if you look at the resource sector, they had an incredible January. I mean, I think that sector was up to 12.5% in January, and then it had quite a big pullback since then. And actually, it's had pretty much a slump in June of this year. I think that resource index dropped about 16%. And this is really driven by sluggish global economic conditions. China, in their property and construction sector, they're seeing slower growth, and so that's led to less export demand, and that's obviously weighed heavily on our mining margin. We've got this yin-yang ongoing Middle East tension, the US-Iran conflict. It never seems to die. It seems to yo-yo from one side of the scale to the other. And that's also contributed to a lot of volatility in that sector. Yeah.
Yeah, it's Groundhog Day, what's going on in the Middle East. And, we discuss it daily on radio, and it just, from one day to the next, you just don't know where that is going. But I think given all of that, it's been remarkable to see how well our market has actually withstood all of those headwinds. The rand has been phenomenal, very strong against the dollar, and we saw just the other day another huge budget surplus announced. So that's certainly supportive of the rand. When you look at industrial counters now, I think they've also produced some eye-catching individual performances, and I think here the likes of Grindrod, Omnia, AECI, obviously Sasol got a big boost from what was going on in the war in the Middle East. Is that evidence of a broad strength in the industrial sector, or are these more company specifics? What are we seeing at a headline level when it comes to industrials?
Yeah, I think industrials have had they've actually remained pretty resilient for the first half of the year. Um, you know, even though we've we've seen a few macroeconomic headwinds and global trade pressures, but they've had a positive 6%. They're up 6% for the year to date, which is good if you consider where the offshore markets have come off. I mean, they're off materially from some of their highs. So I think it's worth mentioning. We've had some standout performances in that sector. You look at Grindrod, which is up 58% to June, and then there's Omnia Holdings. They're up 42%.
Wow.
ACI is another one that's delivered. I think it's about 40% up to end June on strong results. So it's fantastic. I mean, if we even look at Sasol, that was a beleaguered share at the beginning of the year, and they're up 75% from their lows. So, when you look at the importance of being exposed to different sectors, this just shows you that the JSE can deliver, and it can deliver in a period where our offshore markets are coming off materially. I mean, even in our financial sector, Michael, they started strong at the beginning of the year. And, I want to remind listeners that the SARB increased the repo rate by 25 bips in May because of inflationary pressures with this high oil price. And, so the finance stocks dipped in May, but they've come back stronger in June. And, it just shows you stocks like Capitec, FirstRand, Santabank, they have delivered really great performance numbers for the 6 months to June. So, it just shows me that South Africa, we are consistently remaining relevant and resilient, and investors need to make sure they're exposed to these stocks so that they can achieve their financial goals. I think even if we consider Naspers and Process, those are favorites on the JSE. They've had a bit of a pummeling, I must be honest, but that's purely linked to the Tencent share price. Tencent is down 27% for the 6 months. So, those investors that have exposure to Naspers and Process. I mean, if I was you, I'd be looking to buy the dips because those are good companies that you want to remain invested in, and they're purely down because of what's happening offshore. It's got nothing to do with their businesses. It's purely a reflection on the Tencent's share performance.
And given that backdrop, what I like about the South African market is often when we talk about what's going on globally, there is so much concentration. If you just look at the concentration risk around the AI theme, and we know the capital expenditure of the hyperscalers, the Metas, the Microsoft had good numbers recently, and that's been then cascading into the picks and shovels. The memory plays, the Microns, the SK Hynix, and the Samsungs, and we've seen huge volatility in the South Korean market based on one bet, basically. So when you talk about diversification, if you're going into an Omnia or an AECI, mining, industrial, chemical, these are giving you that diversification locally as well in rands. But given this backdrop, what would you say are the key takeouts from investing in 2026 so far, the important lessons that investors need to be mindful of?
Yeah, so I think, Michael, as local investors, we're not spoiled for choice like we are with offshore shares. And so we don't have the same number of counters to invest in, and certainly we don't have the same variety of shares available to us. But, it just shows me if you compare our market to offshore, it's important for investors to have exposure to the JSE. They've certainly, those that have exposure, their portfolios have, I think, had a better, more resilient performance for the year so far compared to offshore. And it just highlights the importance of geographic and sector diversification in your portfolio. I mean, we talk about this all the time, Michael, but this is living proof that You cannot just be invested in one market, and you cannot be invested in one sector. You have to make sure that you are your portfolio is resilient, and that you have exposure to various geographies and sectors.
Yeah, otherwise you're just gambling, to be honest. I mean, if you just
Yeah.
got to take a single stock exposure in a single market, that to me is really the opposite of what we talk about when it comes to investing and building resilient, diversified portfolios that can withstand all of these shocks that you want to throw at them. Given this, though, and given what we've seen on the JSE, given what we've seen in offshore markets, what would your guidance be when it comes to choosing where you should be looking to invest for the remainder of the year?
Yeah, I think it's difficult. We all want that crystal ball, but I don't think any particular sector or share I would focus on. I just think investors should take note that you know companies experience share price volatility, and it's not due to factors specific to them. It's due to factors completely beyond their control, and often it's something quite emotive. There could be what we're seeing now in tech offshore. There could be a rotation out of tech. I mean, Samsung has come off materially from its high of about $6,000 a share. But I think it's important for investors to remain invested. Like, don't panic around, oh, I see the market's coming off, I need to sell out of everything, because I see that. And if you look at the recent rebound in that we're seeing last night in offshore markets, I mean, if you'd sold out at the lows, you wouldn't be participating in this now.
Yeah.
So you need to make sure that your diversification is there. You need to make sure that you are invested. I think that's the first thing. And you don't panic when markets come off. You look to see if you've got any dry powder, and you look to see if you can invest in those lower stocks. You make sure that you are invested in those solid companies. You understand where they're going from a strategic perspective, and you want to be invested to get access to those dividends and access to those growth to that growth over time. So yeah, I don't think there's any particular sector. I think if I would look at me personally investing, I want exposure to the JSE. I want exposure to offshore. I want to make sure that I've got sector diversification across both geographies, not more than 5% in any particular counter. And if possible, have a bit of dry powder in my portfolio that, should the markets come off, I'm able to reinvest in some of those companies that sets me up for long-term
Yeah.
investing success.
Yeah, when they go
Yeah.
on sale, you want that dry powder for
I
the
like a
rare
bargain.
the Black Friday sales that do happen. I mean, just look at what's happened in the memory chip market this week, for example. If you had gone
Yeah,
in at the
and the
bottom,
hyperscalers. Yeah.
absolutely. And I do think, Wendy, it's such an important point, and it's often the framing. We frame it, it's kind of either the JSE or going offshore, and I think that's the wrong question. I think, and what you've just demonstrated, what the market has demonstrated that you've really just surfaced, is that that's the wrong question. You should be saying it's both. And the objective is therefore not to predict which geography or which market is going to win the next 6 months. Construct a portfolio that doesn't require one to have that crystal ball to forecast to be perfectly correct in order to withstand and to make money, at the same time. So Wendy Myers, thank you very much, head of PSG Securities. Thanks for, I think, a great reminder that diversification doesn't mean shifting everything offshore this week on Business Talk.
Such a pleasure, Michael.